I think it is an option. It's a lot easier than inflating outright or defaulting outright. Put the gold, and as crazy as it sounds, Kai, you put it at 142,000 an ounce, and 100% of your liabilities on the U.S. balance sheet would be offset with gold and would give you options. And every $4,000 increase in the price of gold, the Treasury General account gets $1 trillion free and clear. Is it crazy? Yeah, it's unconventional, but it's being bantered around by a lot of people. It would create hyperinflation.
Exactly.
Quickly. It would create hyperinflation. It would eradicate debt across the whole spectrum, and then would hopefully allow a new system to rise from it.
According to the Treasury Department, the United States faces unprecedented economic challenges as the national debt reaches $36.2 trillion, surpassing the $36.1 trillion debt ceiling. The government has resorted to creative accounting to manage its obligations, highlighting the growing urgency to address unsustainable financial practices. AndySchectman, a prominent voice in the gold and financial markets, has suggested that revaluing gold to $142,000 per ounce could potentially eliminate global debt. However, Schectman acknowledges that such a move would likely trigger hyperinflation, severely devaluing fiat currencies. Schectman in another interview warns of the declining power of the U.S. dollar, stating, "The dollar is being eviscerated. We create $100,000 of debt per second, or $1 trillion every 90 days. We're destroying the dollar." He attributes this crisis to the mismanagement of U.S. monetary policy and the Treasury's weaponization, which has led to a global pushback against the West. This backdrop has spurred a surge in gold accumulation by central banks, including BRICS nations, which have purchased gold at near-record levels over recent years. Many of these countries also repatriate their gold reserves, signaling a desire to reduce reliance on Western financial institutions and strengthen their domestic holdings. China, a key BRICS member, is leveraging the de-dollarization trend by promoting the yuan for international trade. The country aims to convince 40 more nations to use the yuan for cross-border transactions, increasing its share in trade settlements from 2% in 2019 to 4.6% in 2024. This shift challenges the U.S. dollar's dominance. Additionally, the rising accumulation of gold highlights its role as a hedge against economic instability and an alternative to the dollar in global finance. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Gold is held in every central bank balance sheet, ironically enough, in an account called the gold revaluation account. You have the head of the Dutch National Bank who's been advocating for revaluing the price of gold for a very long time. This isn't a new topic, by the way. I mean, Roosevelt confiscated gold in April of 1933, paid everyone $20.56 for their $20 gold piece. That 56 cents, 100 plus years ago, had significant purchasing power back then when a loaf of bread was a nickel, and you're getting an extra 56 cents for every $20 coin that you turn in. It had significance. People were happy, and then immediately he devalued the dollar by 40%, making gold $35 an ounce. And so it was revalued in essence. And we saw the same thing in 1971 when Nixon closed the gold window, only it was revalued by the market, not by a central authority. The window was closed at $35 an ounce, and here it is today at over $2,700 an ounce. It was revalued. To bring it closer to home, Senator Loomis from Wyoming, Cynthia Loomis, at the Bitcoin conference in Tennessee, speaking right after Trump, gets up on stage and says, President Trump is advocating for the Bitcoin Reserve. I am going to float a bill that requests the gold being held by the Federal Reserve on behalf of the Treasury is revalued, with the proceeds being used to buy the Bitcoin. And so the point of it is that it is an option where all of the central banks have been accumulating gold for the past several years. And before that, the most powerful bank in the world reclassified it the only other Tier 1 reserve asset in the world. And if you take a look at the progression, the BIS is not only the biggest bank in the world, they're the most powerful. They make the rules, they know the decisions. Why would they reclassify gold Tier 1? Why would the central banks be purchasing it at a level the world has never seen? And it's not stopping. October and November 2024, I haven't seen the December numbers yet, their purchases were double the 12-month moving average. And then equally as startling to me and telling is the repatriation. Over 40 countries have brought their gold back from the New York Fed and the Bank of England. India, as an example, bought more gold in the first few months of 2024 than they did all of 2023, and they brought all of that home along with 100 metric tons they've held at the Bank of England for a very long time. There is a drive to repatriate the price of gold. There is a drive, or repatriate gold in terms of possession, and there is a drive to revalue the price of gold to reflect a balance sheet across the globe that are filled with liabilities. And as it is right now, gold is not allowed to offset those liabilities on the balance sheet and is valued across the globe at $35 an ounce on those balance sheets. It's no wonder the head of the Dutch National Bank or one of the main representatives at the Bundesbank say, yes, we have all this gold in the revaluation account. We should do something with it. So yeah, I think it is an option. It's a lot easier than inflating outright or defaulting outright. Put the gold, and as crazy as it sounds, Kai, you put it at $142,000 an ounce, and 100% of your liabilities on the U.S. balance sheet would be offset with gold and would give you options. And you know, every $4,000 increase in the price of gold, the Treasury General account gets $1 trillion free and clear. Is it crazy? Yeah, it's unconventional, but it's being bantered around by a lot of people. And when I saw it come closer to home with Senator Loomis actually bring it up, I started to think, well, this is something that's on the table. They certainly notice it.
No, 142,000 is a big number.
Of course.
Every,
so
every,
is
every,
Bitcoin at 100,000.
The global silver market faces significant pressure from rising demand, strategic stockpiling, and limited supply. India has imported almost 900 million ounces in the past 4 years, while countries like Russia and China have been accumulating silver for their reserves. AndySchectman notes that this increased demand emphasizes silver's vital role in global markets and its importance in industrial applications. Historically, the silver market experienced a fundamental surplus from 2011 to 2023. During this period, Metals Focus reported that the surplus amounted to over 78,000 metric tons, equivalent to 2.6 times the industrial demand projected for 2024. Investors absorbed this surplus through significant over-the-counter investments of nearly 100,000 metric tons and an additional 12,000 metric tons in exchange-traded products. The silver market will enter a fundamental deficit by late 2024 as rising demand from solar energy, artificial intelligence, and transport electrification outpaces supply. This deficit is expected to worsen, leading to a significant depletion of silver inventories. The increasing use of silver in high-tech industries emphasizes its critical role in the transition to clean energy and advanced technologies. Countries like China and Russia are securing their silver supplies, highlighting its strategic importance. This shift from surplus to deficit has significant implications for industrial stakeholders and investors. Let's get back to the interview.
You look at the amount of silver that India's imported, almost 900 million ounces in the last 4 years. As you mentioned, Russia making a part of their strategic stockpile. China is gone from a net exporter to a net importer. They're flying all around the world to Peru and to South America in particular, disintermediating the market and buying directly from the miners. They're buying doré bars, which are a crudely refined bar, maybe 40-50%, before it gets sent in for further refinement. And they're buying concentrate and sending it all home, paying double what the West will, and having it refined further in China. 77% of all of China's industrial uses of silver is coming from concentrate that they buy directly from the miners, which disintermediates the marketplace. No one knows how much they're getting. It doesn't affect the price. They're the second largest producer of it in the world as well. And here we are again. We'll have a 280 million ounce shortfall this year again, which is the fourth year in a row over 1 billion ounces short. It's a structural deficit that's not going away. You had 47 million ounces delivered off of COMEX in December. Who's taking that? Where's it all going? On the LBMA right now, you have 800 million ounces. It's the lowest position they've ever had because of that 800 million, 500 million belong to the ETFs. That leaves a float of 300 million ounces. They trade 290 million ounces per day on the LBMA. They trade the entire float. However, they admit to the fact that that trading is 10 times understated because they only post the final settlement numbers, which would mean they're trading as much as 3 billion ounces of silver per day, which is 3.5 times annual global mine supply. They have a 300 million ounce float against between 4 and 6 billion ounces short naked. 90+% of all of those short trades are naked, meaning there's nothing behind it but stupid commercial banks' ability to continue to suppress the price. And that's something that I think needs to be understood because what it is a powder keg waiting to happen. And whether it be a delivery failure or a force majeure, on COMEX, silver is rehypothecated close to 2,000%, meaning 20 people hold a 5,000 ounce contract. If every one of them stand for delivery, one will be lucky to get the metal, the rest would be cash settled or force majeure. You have military industrial complex that needs silver. It is omitted in the supply-demand numbers. If you Google H.2768, I believe is the number. That was a congressional hearing in 1942 where they basically, they're talking about using silver for war purposes. And they said at the present rate, we're using 200 million ounces of silver per year for military. Well, 3 years ago when I gave a speech right here, right behind us, I said that there's 500 ounces of silver in a Tomahawk cruise missile. And a guy that was here yesterday and the year before comes up to me and he says, I work for the Department of Defense. I helped design the Tomahawk and the Patriot missile. I think you're right. I think there's silver and it'll let you know. He comes back last year with a stack of pictures. He says, this is all declassified, so I can tell you this. This is how we had to shoot it out of a platform in the ocean vertically. They were meant to come out horizontally out of torpedo tubes and all this stuff. He says, but you know what? You're right. There's between 13 and 14 kilograms in the cone of most of these high-tech missiles. That doesn't take into account the aerospace and the ICBMs. All of these super high-tech military applications need copious amounts of silver. So take a step back and ask yourself, why would 8 commercial banks be stupid enough to have the largest concentrated short position in any commodity ever traded in the history of COMEX on silver?
The changing global market dynamics signal a crucial turning point for gold and silver. As countries focus on reducing reliance on the US dollar and increasing their precious metal reserves, the global financial landscape is set for transformation. Silver's shift from surplus to deficit emphasizes its growing importance in advanced industries, marking a time when its strategic value may surpass its monetary appeal. As economic and geopolitical trends shift, precious metals will likely play a key role in wealth preservation and technological advancement. How do you think the rising demand for precious metals will reshape global financial systems and industrial innovation? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.